Wow, this is crazy. Okay, let's dive right into this because I've got to tell you, my screen is absolutely flashing green right now. We are looking at Rocket Lab, and the stock is making massive headlines. I mean, it jumped a staggering 16.23% in a single day, completely smashing through that $98 mark. We're seeing retail accounts going completely wild over this. And hey, we're talking about a company that is quite literally going to the moon. Well, at least in the news cycle. We've got all these headlines about their 10th dedicated Electron launch for Japan's Synspective over the weekend, and they did that even after having to delay an IQPS launch because of wind. Honestly, it feels like every time I open my feed, Rocket Lab is doing something straight out of a sci-fi movie.
Right, but let me break this down for you. While the market enthusiasm is absolutely palpable right now, if we want to understand the true valuation, we have to strip away the retail hype. We need to look directly at the underlying mechanics, because structurally, you cannot invest based on stage separations and pretty rocket exhaust.
Okay, but look at this. The awe of space. I mean, they are launching actual rockets into orbit. As an investor, it is so easy to get caught up in the romance of space exploration. I'm looking at the 16.23% stock surge, I'm reading these headlines about rapid response launches, and I'm demanding to know what is actually happening in these retail accounts right now. Are people just blindly buying the dream, or is there real substance here?
The market isn't just reacting to the visual spectacle of a rocket launch, it is reacting to a fundamental shift in the company's capabilities. If you look at the data, it's proven by the specific contracts they are actively securing. The awe of space is exactly what masks the harsh reality of the market, which is why we absolutely must focus strictly on the structural developments driving this price action.
Fair enough. Let's get right into part one, the hook and translation, and look beyond the hype.
So, we must look at the data to understand the real market mechanics at play. The stock price isn't moving just because a rocket went up. It's moving because of what that specific rocket represents to the institutional investors and government agencies funding these operations. To truly grasp this, we have to translate these aerospace milestones into financial realities. The data shows there are three specific triggers driving this recent news cycle. First, Rocket Lab broke a global rapid response record with its Victus Haze mission for the U.S. Space Force. Second, they just won a 3-launch NASA contract for the Pulsar and TSIS-2 science missions, right out of Launch Complex 1 in New Zealand. And third, the massive corporate merger news regarding their acquisition of Iridium. Oh my gosh, really? Wait a minute. So it's not just one lucky launch. We're talking about the military, it's NASA, and it's corporate M&A all hitting at the exact same time. But hold on, that is a ton of jargon. Rapid response, Pulsar, TSIS-2. I mean, for the everyday investor, what does it actually mean? It means they are proving mission agility. According to CEO Peter Beck, their integrated capability is transformative for what the industry calls responsive space. They are demonstrating they can secure and defend national space interests rapidly, on demand, and that is a highly lucrative capability for the United States and its allies. Honestly, that's still a bit too complicated. Could you give a simple analogy? Like, if I'm explaining this to an elementary schooler or just my buddy at a backyard barbecue, what exactly is Rocket Lab's actual business?
Think of them as a delivery truck company that doesn't just drive the truck, they also build the incredibly valuable cargo inside it. Historically, space companies were just the delivery trucks. They provided the launch services to get small satellites into orbit. But Rocket Lab actually sells the spacecraft, the components, and the software that run on them. They are an integrated launch and space systems provider.
Okay, got it. So what you just said basically means they aren't just Uber driving satellites into space. They're literally building the passengers too. They want to be a total one-stop shop for governments and commercial customers. That makes perfect sense. But how does that actually hit the bottom line?
Which perfectly brings us to part two, the financial reality, looking at revenue versus losses.
Okay, so they build the cargo and they fly the truck. Brilliant setup. But now I want to put on my devil's advocate hat for a second. We've talked about the cool rockets and the flashy government contracts. It is time to investigate the underlying financial health of this company. Because look, if I'm putting my hard-earned money into my stock account, I do not care how cool the rocket is if the business is burning cash.
Exactly. The transition from a narrative-driven stock to a fundamental investment requires a strict analysis of the income statement and balance sheet, and the reality is stark. Looking at the 2025 reports, Rocket Lab generated a very healthy US $602 million in revenue. However, their operating income sits at a negative US $229 million, and their net income is a negative US $198 million. Furthermore, while they boast total assets of US $2,324 million and total equity of US $1,722 million, the numbers prove this is a company that is fundamentally loss-making at this current stage.
Wait, what? Actually, let me make sure I heard that right. They brought in $602 million in revenue and still managed to lose $198 million. That is a massive net deficit.
It is proven by the numbers. To own Rocket Lab, an investor must objectively accept that the company is currently relying on a balance sheet fully funded by external capital.
Well, then, I have to aggressively question this. Why in the world is the market going absolutely wild, pushing the stock up over 16%, and giving them a market cap hovering somewhere between $46.7 and $48.9 billion, when they are running a $198 million deficit? They are losing money hand over fist. Seriously, what does this massive cash burn mean for our everyday investor's portfolio?
It means investors are paying for future growth and market positioning, rather than current profitability. The market views the US $198 million deficit not as a failure of operations, but as the necessary cost of entry to build a massive, integrated space infrastructure. Now, to understand exactly why the market tolerates this deficit, we must analyze where that US $602 million in revenue is actually coming from.
Let me break this down for you. The revenue streams are shifting dramatically. According to the 2025 operations data, launch services, which is the actual firing of the rockets, accounts for US $227.1 million. However, space systems, meaning the satellites, components, and software, now generates US $452.5 million.
No way! Now, what's really interesting about this slide is that the delivery truck is making way less money than the cargo.
Precisely. Roughly two-thirds of their revenue is now directly tied to space hardware and services that sit on top of the rockets. This is critical because historically, space hardware offers higher margins and more recurring revenue than the highly commoditized and incredibly competitive launch sector. The market is valuing them based on this successful pivot toward the highly lucrative space systems segment. Okay, so the cargo business is booming. Awesome. But they are still bleeding $198 million a year. Where on earth is all that money going?
The financial reports show this deficit is driven entirely by heavy spending on the development of their new massive rocket called Neutron. The Electron is their small rocket, which they use quite frequently, but to compete directly with SpaceX for big satellite constellations, deep space missions, and potentially human spaceflight, they must build Neutron.
Wait, so they are basically betting the farm on this new mega rocket?
Yes, and it carries real documented risks. The financial reports explicitly cite ongoing losses, shareholder dilution, higher risk borrowing, and an unproven commercial ramp for Neutron. If there are execution missteps with Neutron, the resulting share price volatility will severely punish the stock.
All right, let's move right along to part 3, digging the moat and their integration strategy.
So if I'm breaking this down so far, they are burning cash to build a giant rocket just to fight SpaceX, and if they mess it up, retail investors are going to get diluted into oblivion. That's a massive financial risk. So, Doctor, what makes this company actually worth investing in despite these risks? What is their irreplaceable weapon, their economic moat?
To understand their moat, we have to look at the industry's macroeconomic environment. The commercial space equation is completely changing, and Rocket Lab is executing a strategy to capture an entirely new tier of value. The megatrend in aerospace right now is the shift from just providing launch services to owning an end-to-end space platform. A launch-only company is completely exposed to commoditization. As more rockets are built, the price to launch goes down, which squeezes margins. An integrated network company, however, controls the rocket, the satellite, and the data transmitted by that satellite.
Ah, I see. So if you just launch things, you're basically competing in a race to the bottom on price. But if you own the whole network, you're untouchable.
It's proven by the numbers. Reuters analyzed that Rocket Lab's recent transaction marks a definitive turning point, shifting away from a launch services-centric business toward owning both satellite networks and the communication services.
Okay, wait, you mentioned a transaction. Are you talking about the Iridium deal that was flashing across the news ticker earlier?
Yes, Rocket Lab bought Iridium specifically to build an integrated launch-to-satellite network. Acquiring Iridium gives Rocket Lab globally coordinated low Earth orbit, or LEO, spectrum rights.
Spectrum rights? Wait a minute. What do invisible radio waves have to do with my stock account?
Everything. In the space industry, spectrum is the exact equivalent of digital real estate. If you want to do big things in space, you need spectrum to transmit data back to Earth reliably. According to the company's internal data, acquiring these rare spectrum rights opens up a total addressable market, or TAM, of over US $100 billion. It is mission-critical technology for consistent, global coverage.
Let me break this down for you mathematically, based on the company's space application equation. There are historically three massive challenges that kill traditional space companies. One, acquiring spectrum. Two, the extremely long time it takes to deploy infrastructure before seeing your first dollar of revenue. And three, the long time it takes to build a business model and a customer base for sustained cash flow.
So what you just said basically means this perfectly illustrates how Rocket Labs is completely bypassing that whole mess.
Correct. By combining Rocket Lab's existing launch capability in satellite manufacturing with Iridium's global satellite communications network and rare spectrum, they've found a structural shortcut. They no longer have to wait years to deploy. They can launch on demand with spacecraft at the ready.
So they had the rockets, they build the satellites, and now they literally own the invisible real estate to transmit the data. What does this mean for the competition? Are they going head-to-head with Elon Musk now?
Logically, yes. Reuters assessed this as a strategy moving directly closer to the SpaceX and Starlink model. Peter Beck explicitly stated this transaction is the beginning of a new era of strategic growth. It's what the company calls the quintessential Rocket Lab deal. They aren't just investing in dreams here. They are buying capability that is accretive and highly profitable, applying their magic to absorb, unify, optimize, and scale.
Let me get this straight. Peter Beck saw how much money Starlink prints for SpaceX, and he essentially just bought the missing pieces to build his very own version? Wow, that is a massive moat. Okay, part 4, 3 survival scenarios, base, bear, and bull. Let's get into the future. Okay, enough theories. We've seen the 16% stock pop. We know they are burning $198 million a year, and we see they're trying to build a Starlink competitor. I want the absolute bottom line. Drop the theories. Based on the current data and analyst projections, what are the clear future scenarios for this stock? As a rational data analyst, I must present the strict, trigger-based forecasts. We have compiled the analyst projections through 2029 to outline 3 distinct scenarios: a base case, a bear case, and a bull case. The trajectory of Rocket Lab's stock through 2029 will be dictated entirely by whether specific preconditions or triggers are met. The market is currently pricing in a blend of these outcomes, which accounts for the high valuation and recent volatility. Let us examine the data for each specific scenario so investors understand the exact risks and rewards they are exposed to over the next 4 years. First, the base case. This is the most neutral and likely future based strictly on current data. Rocket Lab's base narrative projects $1.7 billion in revenue and $167.5 million in earnings by 2029. Okay, so they finally flipped to being profitable in the base case. Nice. But what's the stock price doing in this scenario? Financial modeling of these forecasts yields a fair value of $103.91 per share. However, the strict trigger for this scenario requires continued reliance on what analysts call large, lumpy government awards. They must consistently win defense-related missions without major hiccups to maintain this steady climb. Okay, now give me the bear case. What happens if the wheels fall completely off the delivery truck? The pessimistic bear case is triggered by execution missteps. As noted earlier, the balance sheet reveals they are fully funded by external capital. If the Neutron rocket experiences severe development delays or launch failures, the company will be forced into further shareholder dilution and high-risk borrowing just to keep the lights on. In this scenario, the combination of ongoing losses, insider selling, and intense competition from SpaceX will severely punish the stock, proving the risks built into their rich valuation. Okay, but what if they pull it off? What if Peter Beck's Starlink clone actually works?
The optimistic bull case is backed by the most bullish analysts in the market. If the end-to-end satellite network strategy perfectly scales and the Iridium synergies succeed alongside Neutron capturing heavy market share, revenue is projected to hit US $2.2 billion by 2029.
Wow. And the profits?
Earnings in this scenario would surge to around US $365 million. This faster growth view completely offsets the heavy Neutron spending and validates their transition into a highly profitable, integrated space powerhouse.
So the crucial point is this. Rocket Lab has incredible tech, a visionary CEO, and massive government contracts pushing the stock up 16% on pure hype and momentum. But they are also burning nearly $200 million a year to build a mega rocket to fight Elon Musk. To summarize all of this, there is a famous quote from Benjamin Graham that perfectly fits this exact situation. In the short run, the market is a voting machine, but in the long run, it is a weighing machine. Right now, retail investors are voting for the awe of space. But in the long run, the market is going to weigh their actual ability to get Neutron off the ground and turn that $100 billion spectrum market into actual cash flow.
Precisely.
The data shows the potential is monumental, but the execution risk is equally high.
And that brilliantly illustrates exactly why we have to dig deep into the numbers. Thank you so much for watching today's Explainer. We absolutely love breaking down these complex market moves into clear, actionable insights for you. Your subscriptions, likes, and supportive comments are a huge encouragement for our Explainer series. So we're going to leave you with this final thought. In a future where controlling space means controlling global data, is Rocket Lab building a temporary delivery service, or are they quietly constructing the toll booth for the 21st century space economy? Let us know your thoughts down in the comments below. Stay focused, keep learning, and we'll see you in the next one.